Do you know why price sometimes accelerates to liquidity levels instead of retracing? Understanding low resistance liquidity might just be the key to unlocking this mystery. If you've watched the previous video on high resistance liquidity and market maker models, this video should be all you need to complete your collection of concepts and be able to confidently trade with inside of the market. Over the course of this video, we will cover how liquidity is induced inside of the market and how smart money targets these low resistance liquidity areas after putting in a high resistance low or high. Understanding liquidity induction is not the hardest thing in the world. Liquidity is engineered by exploiting predictable traders' behaviors like trend lines, stop loss placements, and over-reliance on retracements. Smart money then fuels moves to target these liquidity pools. Low resistance zones are where price faces little opposition, allowing it to smoothly transition towards our next target. As you can see on screen, I've put on a lot of trend lines that I see that are used as low resistance liquidity. We haven't put any trend lines on this side because of how bullish we are and where we were responding from, which we will get into. As you can see coming from the previous video as well, we still have our accumulation zones marked, and we will show how we can use these inside of trades to be able to find where we target our low resistance liquidity and where we can enter inside of. I want you to focus where it says price could be retracing high time frame while creating failure swings low time frame. As we can see here, creating retracements and failure swings as well as relative equal highs and equal highs. We can see that we have a big market structure shift lower, reaccumulation, and then a big shift lower into an imbalance below a key low. We're going to keep everything on the chart, but I want to swap to the daily. As you can see, take everything off. We've swept out this previous low, broken a previous high with displacement, leaving an imbalance inside of this area. We can see we leave a daily order block where we've closed above, and that's where we tap into. As well as on the weekly chart, we take out the previous body low, as well as also sweeping that low out here. We move back to the 4-hour chart, put all the makeup back on the chart, and we'll hop into a couple areas where you can see our low resistance liquidity run after putting in a high resistance high down here, a high resistance high here, as well as even up here. You don't want to trade the sell side of the curve or the manipulation lower. I understand this is a 4-hour chart, so there's a couple days. You can find trades inside of here, even maybe this low into here, which I'm pretty sure we might have longed. I'll have to look back, but yeah, with that big inwog, to this high. Either way, using this previous down closure, balanced price range as support higher, we'll go inside of a lot of these accumulation ranges after we sweep the high or low, because you don't want to trade inside of the accumulation range. You want to wait until we take out a previous high or low, create a high resistance low or high, and then draw into our low resistance liquidity run. We've talked previously about us sweeping out this low and how we reacted and why we reacted, and understanding that, we go to the lower time frame and we'll understand this piece of price action from running this low into this piece here. So let's do directly that. What I want to see here is that we swept the low on a Friday, which is okay, understandably going into the next week. Sometimes we like to see the previous week lows liquidity swept, and we can also put a rejection block in with the weekly time frame and the daily time frame to where we don't need to sweep out that low. If the damage has been done and we react, there's no need to sweep out the low again. Sometimes we will need our first tap, second tap into a high time frame PD array, but we can see with how we reacted and then closed with the next 4-hour candle into the next, we close above and we close with displacement. We can see a fair value gap here and with our closure above. If we look at a higher time frame, like one candle like this, see the same thing, We go to a lower time frame, we can see our accumulation, manipulation, that big thick down closure candle, and with our distribution, we move straight up. And one thing I like to note, I like to look at my inwogs, however, on the 30-minute time frame. And one thing we can see here is that after we right? Created the in-wall. What did we do? After the new hourly candle open in 7 o'clock, right, we moved higher. And honestly, I'm gonna cut it right here, show you guys a trade I literally just took like an hour ago, and it's gonna look the exact same as this. Before I show it, keep in mind the low resistance liquidity, right? We sweep our low out into a key level with our fair value gap and the balanced price range in the daily order block. We can also see when we form the in-wog, internal with the internal liquidity, right? External above the highs. If we pull price back here really quick, look on the 5-minute, right? What do we see? Equal highs, trend line low resistance, and then, on the higher time frame up here as well, right? So let's look at that trade we just took. We can see I posted this at 7:17. It's only 7:46, and we'll show how we swept out the low here, right, into a fractal buy model with the low resistance, equal highs here. Alright guys, I can tell this video is going to be over 10 minutes long, and honestly, I can see the retention rate's usually not that long on educational videos. I don't want to overwhelm you guys, so please, let's get to 50 likes. I'll upload the second part of this video so you guys can get all the information on this whole buy model, the low resistance, and everything included. Let's continue on with the video. Okay, so pretty simple to say here, right? We accumulated big market structure shift lower. We can see we swept out this low here into a balanced price range. We can see we swept out this internal low and then delivered externally above the highs. Yes, this was a high resistance liquidity run. There's not really low resistance other than the small lower time frame here and the understanding that this low put in and these lows put in, are going to hold in as we continue higher. So as we zoom into price here, like I said, watch the last video or two, the one about the market maker buy models and high resistance liquidity. We cover this whole piece of price action, okay, and you can see that we break close above with the fair value gap. Just in simple terms, obviously I see we digged lower, and we talked about that, but right, we close above displacement with the fair value gap, and we're continuing above, okay? So coming into a lower time frame chart, we can see this is how we ended Friday. Big in-wog on the open. Don't be scared of big price movement because we can see we're reaccumulating obviously above our old high. If we look on the hourly, right, we're also accumulating above these old highs over here. Excuse me. So we go to the 5-minute. We accumulate, break lower, and I know it's not a big break, but right, we leave a fair value gap on the 1-minute below our low into our gap, right? And I know we don't necessarily hit the, highs to the left, but we don't always need to, right? We'll show that piece of price action here shortly, so you guys can kind of understand when and why and where we don't. We can see coming into the video's name, the low resistance, the equal highs. And then, like I said, obviously I can see that we souped out that high, even there, right? But it builds and induces liquidity into the high and builds low resistance. We sweep out the high. High probability order blocks put in, so you're able to enter here, run it out longer. I see we took out the high, right? Let me put it right at the top so you can see, right? And we ended up, hitting my partial, so I go break even. Hit break even. I ended up entering micros right when we take out this body high because I know we're going to end up continuing, and those are little small things that are hints into deeper deeper knowledge about market maker buy and sell models. But you can also see right here, right, the low resistance liquidity, the trend line resistance, and one thing I didn't mention here, right, is we had an SMT at this low. So not only is this a turtle soup, we have an SMT as well that delivers higher, delivers a whole bunch of liquidity into the high. Yeah, we souped it here, souped it, whatever, ran the high. But you can see these are the soups I like to take versus ones like this. Every single explanation I'll ever have will look like this, right? Fractal buy model, right, with our market maker buy model here, right? Big break lower below the lows. Okay, we also have our accumulation, manipulation, distribution. A little chop does not scare me, okay? And we also have a higher time frame draw on liquidity, right? If we look on the 4-hour, right, into these highs, this candle high, the volume imbalance there, right? And if you even look on a daily chart, right, big volume imbalance there, right? So just easy low-hanging fruit draw, but we already went ahead and took profit, because if we can throw a standard deviation on here, if we look at the manipulation leg, let's go back to the 1 minute, we can easily see, just boom, make it real simple for yourself, right? And set yourself an easy target up here, right? That's all we needed. So we went ahead and got off the chart. One trade here, got break even, entered micros here just to get a little piece of the pie, right? And so this trade would have looked like this, by the way, right? Nothing, absolutely nothing crazy. Super high win rate inside of your buy model, equal highs, induced liquidity, and you know before, you know, even if we need to run lower, we'll need to manipulate the high, move higher to move lower. Your open, high, low, close. But that doesn't mean, obviously, I think we're going to go lower, because, you know, I longed and, you know, gave you a bias and a narrative for us moving higher, and, you know, into the previous videos gave you a bias and narrative inside of these candles as well. So boom, we're right back to our 4-hour completed buy model. We see we swept the internal low. Gonna bring it back here, go to the 30-minute, back to that INWOG we talked about. We can see that internal, external above these highs, right? Even into the low time frame. Bring it back here. Accumulation, manipulation, boom, right? Good entry there. Using those previous down closures to support higher. Displacement, fair value gap. Pretty simple to see there. I hope you guys can see that. Internal into the gap, right? And even here, right, we can see if I would have taken that same trade here, and I get, like, this is 605, right? We saw my trade was a little bit after 7, hint, 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 right? But we see this trade as well played out. Ooh, look at that, a little bit after 7. We sweep the low, displacement, quick displacement to 730. We see our 730 candle open low, hop to the 30-minute, right? Our open low, into the next candle, high, close, right? And then you can show that power of 3 on the hourly, right? And it's just harder to see your internal to external from the INWOG, right? And then you pop there, you see it, wow, beautiful. From there, I'd zoom in on the lower time frame. We can see the low resistance highs here, and then all I would do is just wait for a key time, either be in London, right, with the 2 a.m., right? We see our 2 a.m. open, and we've came into this internal fair value gap. If this is all we take and we don't end up needing to run this lower resistance, right? Even if we run the high here, first purge, come back down, second purge, right? Wouldn't be too, you know, mindful of still taking it, right? You know, even at this point, now I would, you know, look at the hourly, you know, higher time frame, boom, get this off the chart. See the order block we've put in. We've also got this fair value gap probably resting inside of a, you know, 4-hour fair value gap order block, right? So we look at the wick, hop back to the 15-minute. Right now we just wait for, you know, 8:30, maybe 7:30. Probably won't happen. Probably, yeah, not 7:30. We see also we've came into this London low, internal to external here. So we most likely could use this order block to push us higher. If we, coming into 8:30, if we, you know, do it and it looks good, I'll just take it, you know, just to kind of show it for an example. But I'm kind of confident we'll, you know, use this as low resistance. Even if we do this first purge, purge out the high, induce more liquidity into the high with, you know, a 930 Judas upwards, you know, then come in for a 10 reversal. You know, I can't anticipate that. Obviously, we're not just going to go straight up if we need to go straight up. I mean, you know, we're not going to go straight up if we, you know, need to go up. So let's just go ahead and move forward a little bit. Okay, well, if it's going to make it obvious like that, you know, I'll take that. Even up here, right, around this low, that would be good. Obviously, you guys can see if we zoom in on the 1 minute here, right, this fractalized buy model with our big break lower, sweeping out the low into our key level. So we go back to the 5 minute. Let's just go to the 15 minute, see if it looks better. Wow, that's weird looking. But we'll just still take it for example, right? And then we can see our low resistance. You know, even though we ran out the high here, we've induced more liquidity into the high, and we'll still be able to take the trade and, you know, be profitable with it. Boom, we're tapped in, and right, we run the high. Obviously, I can see we went internal to external, but, you know, just entering in there, you know, stop, still able to get a 2 RR. So nothing crazy. You can see the fractalized bond model. You can see when we put in a high resistance low and then turn into right a low resistance liquidity run with a time-based reversal. I'm gonna leave you guys there because the video is already 15 minutes. Like I said, like the video for part 2. Let's get that like goal hit. Subscribe if you want more content like this, and I'll see you guys in the next one. Peace.